Hello and welcome. You're watching NewsX with me, Devika Devan. Indian manufacturing is no longer just competing on the world stage, it is actively acquiring it. In a massive move for the domestic core forging and fastener industry, homegrown giant Kadimi Tool Manufacturing has just sealed its first major overseas acquisition, snapping up US-based Rol-Flo Engineering. This strategic buyout not only hands Kadimi a manufacturing footprint on American soil, but it has also unlocked the high-growth, high-stakes global aerospace market. Joining us now to discuss this further and the company's roadmap is Sahil Nath, Managing Director of the Kadimi Group. Sahil, it's fantastic to have you on NewsX. Thank you so much for joining us. I, of course, want to begin by understanding from you. Kadimi has just acquired US-based Rol-Flo Engineering. Why was this specific company the right fit for your global expansion?
Well, Kadimi used to have a joint venture with an American company which was owned by Berkshire Hathaway. And then when we bought, and they were our distributor in the US market. And when we bought them out, we didn't have a direct presence in the US. And our US customers told us that, we needed to be in the US and work with them more closely, especially for like new projects and on aerospace. It's very important to have that presence on the ground. So we were looking to find something to buy, and then Rol-Flo, they're a company which specializes in form rolling dies. So that product range complements our thread rolling dies well. So that's how we decided to buy Rol-Flo, as it fits in well with what we do, and it adds technology to our portfolio, which we did not have previously.
Well, Sahil, interestingly, this acquisition actually gives you a direct entry point into a very fast-growing US aerospace market. So what kind of scale and revenue boost are you expecting from this sector?
Well, we're looking to double our US sales in the next 3 years. We're already getting a very good response post the acquisition, as the customers taking us more seriously. They feel that now we're on the ground, and they can trust us to work with them on new projects, and we will be able to turn those around quickly. So we're looking to expand the capacity at Rol-Flo, increase the product range at Rol-Flo as well as expand the capacity in India at Kadimi Tool, and also add the Rol-Flo product range as well. So both the plants would have shared technology and know-how with each other to offer a more comprehensive product range to the customers.
And if I come back a little bit to the history of Kadimi, Mr. Nath, we'd like to understand from you, Kadimi started back in 1977 as a representative for global brands, and you didn't begin manufacturing your own dies until 1987. So how has that decades-long evolution really shaped your current global strategy?
Well, when we started in 1977, the Indian market was small, and there was not a possibility to put up a large investment for a specialized product like thread rolling dies. So we spent the first decade building customer relationships, building supplier relationships overseas, and then eventually we ventured into manufacturing. And the contacts that we had built overseas helped us get access to the technology that was needed at that time. And we grew from there. We started acquiring a customer base, technology, and all that has helped us get where we are now.
And if I come to where you are right now in the 21st century, from launching wire production in 2013 to jumping into fastener manufacturing in 2024, the brand really has accelerated rapidly. So what has triggered this sudden pace of diversification?
Well, we were selling wire in India for a long time, since the 1980s. Cold heading wire, which is used for making fasteners and cold forged parts. And then a lot of our customers, when we were importing the wire, and then a lot of our customers were telling us that, look, the volumes are increasing in India. There's not enough good quality wire. Why don't you start manufacturing the wire? And that's how we got into making wire, and that was in 2013. And then post 2020, we started exporting the wire as well to our global customers. And then some of our global customers started asking us for fasteners as well, as we were supplying them the thread rolling dies and the wire. So that's how we got into fasteners.
And Sahil, coming to now your global operations for just a moment, operating a manufacturing base in the United States, of course, comes with its own unique challenges. So how do you plan on balancing your Indian operations with a very new US ecosystem?
Well, it is definitely challenging, manufacturing in a different market. It's something it's new for us. But, we have a good team at Rol-Flo, and we have a good team in India as well in Kadimi. And everybody's very excited and geared up. And, both the teams are working well together. So I think, it's working in the right direction. We are planning to have both the companies operate separately. At the back end, they're sharing know-how and technology and best practices. But now we have two brands, and everybody's going out and offering the best product range for their customer base. So I think both companies are complementing each other pretty well.
And Mr. Nath, before we let you go, a couple of more questions. Your long-term roadmap highlights an interest in Western Europe, Japan, and China. Are you already hunting for your next acquisition in these markets?
Yeah, actually, we've been working on these acquisitions for a while now. We've acquired Rol-Flo in the US. We're also looking for more opportunities in the US and to grow our US manufacturing base. Western Europe is another area that we're looking at. Nothing concrete there as of now. China has been a large market for us. And in China, we are in advanced stages of discussion to have a joint venture with a Chinese company. Chinese market is very interesting. It's been increasing. It's matured a lot, and there's a lot of opportunity out there. We're also looking at Japan, where we have a small market share, but we're discussing to buy out a company in Japan and own that 100% to get a better presence into the Japanese market.
Mr. Nath, you've also mentioned on that front exploring the strategic monetization of assets down the line. What will the Kadimi Group look like 5 years from now?
Well, 5 years from now, I see us, expanding all our four plants in India and the US. Also looking at acquisitions, as I mentioned before, in US, Europe, China, and Japan. So hopefully we'll have a manufacturing presence in all those markets. As far as asset monetization, that's something that's probably a little bit down the line. Nothing concrete on that as well. So we'll see how that goes.
Well, Mr. Nath, that's all the time that we have. But thank you so much for joining us on NewsX with that perspective. Thank you for watching.